The man who never ceases to amaze, Elon Musk, has a few surprises in store. We're going headfirst into the world of Tesla today, from astounding discoveries to groundbreaking advancements. In the realm of Tesla stocks, there has been a flurry of interesting news, and we have some really fascinating tales to tell. This is a day to remember if you are an investor in Tesla shares. Not only that, but we also have industry insights, the most recent information on Tesla's stock performance, and a preview of what lies ahead for this massive automotive company. Please click the like and subscribe buttons before we move on if you want to be notified when we post more content similar to this. Having stated that, how about we start this video, shall we? Let's start by discussing a development that shocked even the most knowledgeable Tesla investors. The man himself, Elon Musk, has delivered a bombshell of optimism that would make any long-term investor leap for happiness. For Elon, the excitement of the game is what matters most, not having to fight all the time. In his view, Tesla is the ultimate game changer on a path to become the most valuable business in the world and earn an astounding $1 trillion in profits annually. That is a number that is sure to turn anyone's head. What's really amazing is that Elon Musk actually means what he says when he says something like this, rather than just putting it out there for show. Elon's genuineness comes through, unlike others who might make bold claims to win over investors and staff. But whether he can make this ambitious ambition a reality is the key question. The really interesting thing, though, is that Elon's constant willingness to push limits and take chances, rather than sulking over his prior achievements and instead striving to rise to the next level of the game, is what really distinguishes Tesla. 6 months after the 4 millionth car was driven off the lot, Tesla has just accomplished an incredible milestone, the 5 millionth automobile. That's growth on steroids. That's not ordinary growth. This is a cause for celebration for me as a seasoned Tesla investor who got on board back in 2019 when the company's stock was far less than $1 million. What comes next, though? Despite Wall Street's forecasts, we think the economic train is still going strong. Tesla is creating a revolution, not just automobiles. Looking at the car industry, a clear disparity becomes apparent. Tesla is on a totally different path than traditional auto titans like GM and Stellantis, which are mired in UAW strikes and experiencing a complete halt to their manufacturing lines. The figures say it all. Not just locally, but globally as well, Tesla is currently accomplishing the amazing accomplishment of creating a new vehicle every 3.5 minutes. The competitors are suffocating on the dust of their stagnation due to this production tempo. The lost chances of the past are especially fascinating. 10 years ago, legacy automakers had a clear opportunity to seize the electric vehicle revolution. There were indications, technology was developing, and a sustainable future was edging closer. But they made a different decision. They wavered, stuck to their conventional gas-guzzling versions, and allowed the chance to pass them by. They are currently having difficulty catching up to Tesla, a business that has not only welcomed but also expedited the shift to electric vehicles. The effects of those decisions are being felt right now, raising the question of whether legacy manufacturers can keep up with the times and stay relevant in the fast-evolving automobile industry, or if they will fall behind Tesla's innovative trailblazers. In the meantime, Tesla is constantly breaking records and changing the laws of the game. Everyone is focusing on these historic automakers, and to be very honest, I have no sympathy whatsoever for companies the size of Ford, GM, or Stellantis. However, a small amount of melancholy exists for the diligent workers entangled in this chaos. Unfortunately, a lot of people might lose their employment as a result of these organizations' inability to make the necessary transitions. It serves as a sobering reminder of exactly how bad the UAW situation may be for all struggling automakers, not just Ford. If the UAW proposal is put into action, Ford's UAW-related labor costs will skyrocket, nearly tripling from their current level. And what do you know? Compared to global automakers like Tesla, Toyota, and others who use non-union workers in the US. Thus, prospective investors, while you may be eyeing a point of entry, keep in mind that timing the market is like chasing shadows. 2019 would have been a costly year for you to have waited for a better entry point. Not short-term benefits, but long-term vision is what matters. Avoid missing out on the upcoming significant Tesla run. There are situations when jumping in now is the wisest course of action, even though UBS may advise waiting for a better opportunity. Refrain from allowing FOMO to overcome you. Vision is key when investing, and with Tesla, the future appears bright. So buckle up, keep your eyes on the road, and come along on this amazing Tesla ride with us. As of August 2023, price reductions have stabilized, according to UBS's Tesla Price Monitor. If that's the case, investors in Tesla should be happy, but those looking for a deal might not be as happy. Still, it's a bit of a riddle. Why is UBS claiming that prices have steadied when they think there may be a better entry point? It's a puzzle, but let's try to solve it. UBS has thoroughly examined Tesla's capacity increases and past facility ramp-up rates. According to their findings, midterm growth may be limited if pricing is in line with demand and supply cannot keep up. Here's the clever turn, though. According to UBS, Tesla plans to carry out more pricing elasticity experiments. Stated differently, they will adjust prices in response to changes in supply and demand. Although this short-term approach can cause some controversy, it might be the key to Tesla's long-term success. Their ability to cultivate a sizable customer base and maintain their loyalty will allow them to put pressure on rivals that have more expensive battery electric vehicle cost structures. Therefore, although it may appear paradoxical at first, in the long run, it's a brilliant move. Let's now turn our attention to a significant development: the opening of Tesla's first experience center in Thailand. I'm in love with the term experience center. For prospective Tesla owners, it's an immersive experience rather than merely a showroom. For investors and Tesla stockholders alike, this is a critical milestone that demonstrates Tesla's global reach and dedication to the Asian market. The big reveal, though, is that it appears the Chinese government is pressuring manufacturers of electric vehicles to employ electronic parts made in the country, including semiconductors. Although it might not appear significant, this is seismic. It might have serious consequences and goes against their grand opening slogan. Do you believe that other nations will gladly welcome Chinese cars with open arms if this is really happening and information goes around? It's unlikely. Trade disputes and tariffs could become commonplace. However, there is a bright side for Tesla. To withstand these storms, Tesla already intends to make cars on every continent. It's important to note that there is no paper trail, and that the directive to use domestic parts was communicated verbally during a meeting roughly a year ago. China appears to have played this deftly, eschewing overt proof that overseas companies are being shut out. Although it is a calculated approach, it may not sit well with other countries in the long term. Recall the recent news that the European Union intended to look into Chinese electric vehicle subsidies and maybe impose tariffs on Chinese automobiles. It's likely that there is a connection between these two tales, and that everything here is a part of a larger chess game in the global auto industry. The consequences of Chinese enterprises engaging in fierce competition in the production of electric vehicle parts may be felt worldwide. On the one hand, manufacturers in the US, Europe, and Japan might become less competitive internationally, which might have an impact on employment and the economy of these areas. However, Chinese automakers and suppliers of parts would have trouble breaking into other markets and might have to contend with higher tariffs and trade disputes. Let's now discuss Jim Chanos, the short seller who made the headlines in 2017 when he said that Tesla had no value. In 2023, he remains skeptical and refers to Tesla as being absurdly overpriced. However, Jim Chanos has demonstrated his mettle by shorting Tesla stock earlier this year, in contrast to certain other pundits. There are questions about his prolonged short position, especially in light of Tesla's notable gains. It serves as a reminder that when it comes to tech stock growth, even experienced investors might fall short from time to time. Never one to stay back, Elon Musk recently